You want to know 3 stock picks for September 2020, and that's exactly what we're going to go through right now. Kicking off this month's top 3 stocks is Intel, the giant semiconductor company that has seen some turbulent times in the last month or so. This was ever since they reported their earnings, but more specifically when they announced delays to their 7nm chip, which is what investors really wanted to see come to market as soon as possible. Now, I've made a couple videos going pretty in depth with Intel, and I even did a comparison video of Intel versus AMD, and I strongly suggest you guys watch that video if you're invested in either of those stocks. But today what I want to do is actually share some more information on Intel, some new information that came out recently as well, and I want to go through why I think the stock may actually have bottomed here and could start moving higher in September. And guys, just a quick note, if you appreciate this video, you enjoy this monthly series, just consider smashing that like button down below. It helps the channel out a ton and I truly appreciate it. So Intel had some huge news come out last week where the company announced a $10 billion share buyback. This company has been busy buying back shares even prior to this announcement, but to get authorization from their board for an additional $10 billion signals to me that their team thinks the stock is undervalued at current prices of slightly below $50 per share. They will be using their cash balance to do these repurchases, which again signifies the financial strength of the company. And if you watched my previous video, you know that this company is a cash flow machine and they pay out a healthy growing dividend as well. And now with the buybacks adding into this equation, Intel is definitely a very attractive stock once again. They still have around $2.4 billion left to purchase of their initial $20 billion in share repurchases. So in total, there's around $12.4 billion in repurchases that will happen over the short term. So this is obviously big news that took investors by surprise. However, when looking at their chart, there was little to no movement really in the stock. So what this tells me is that there's clearly still a lot of selling pressure in Intel because the overarching issue of the 7nm chip delays is still plaguing the stock. Now, when I look at what insiders are doing here, there seems to be a mixed bag. Some are buying, some are selling, and while there does appear to be more value in the buys, in my opinion, it's nothing really significant enough here to tell me insiders truly believe that the stock is undervalued here, apart from the fact that they announced buybacks. The other fear with Intel announcing these buybacks and constantly buying back their shares is that a lot of investors think that this may be heading the way of IBM. Now, IBM, great company, makes tons of money, you know, it's still a cash flow machine there as well. But it's a dinosaur company and new investors have little to no interest in this company. They've really fallen out of favor really when it comes to tech stocks, and you know that just happens, and Intel seems to be getting grouped in this category here with, you know, IBM, Cisco, Oracle, all these other old dinosaur companies, and if that happens, it's not really going to be a good look for them going forward. That being said, Intel is in the semiconductor space and they are a leader in a lot of the segments that they play in. So as long as management is able to turn that image around, you know, get things back on track, stop delaying these products and fixing things and being proactive like how AMD is doing, then they have a really good chance of actually coming back into favor, being a strong stock once again, an investment that people are excited about, and that's kind of the potential here with Intel over time. Also, I noticed that hedge funds actually reduced their position in Intel last quarter, and this was before the bad news of the delays. So I assume selling just accelerated after these earnings, which drove a ton of selling pressure. And any buyers that are in the stock right now are not able to push it up meaningfully. So this stock continues to trade in that $48, $49 range. Now, I've previously discussed I would be interested in Intel if it dropped to like the low 40s or even lower. That's where I see a ton of value in the stock. But I do think that under 50 is still decent value. I think it's fairly valued at this price, you know, with a strong dividend as well. So can't really go wrong here. But for me personally, I'm invested in other semiconductor stocks that I'm much more excited about. So Intel really needs a good story and, you know, has to show me a good reason why I should put my money in them. But I will be watching them closely in September to see if there is more value shown. Alteryx, another stock that's taken a beating in recent weeks, made the list here for September 2020 stocks. If you want a full in-depth video on Alteryx, check out the description to understand what the business does, what makes them an interesting company, and why their stock is looking somewhat attractive today. Anyway, similar to Intel, in recent weeks, stock has been moving sideways after selling off significantly after their earnings, and it seems to have found some sort of bottom here around the $110 level. In my previous Alteryx video, I mentioned that I was watching this to come down to around the $100 range or so, and we actually did get pretty close to their hitting around $106 recently, but I did not enter a position at that time. Now, I will say that current prices around $110 a share is somewhat attractive for this stock because there is a lot of opportunity here for growth in the future. Now, take this with a grain of salt, because I do, but analysts are still generally very bullish on Alteryx, with a possible 50% upside that they see in the stock from current prices, so there could be some very good opportunity here. In recent weeks, insiders of Alteryx have been busy selling this stock with some quite significantly large sell orders, so I'm not sure if there's more bad news coming next quarter, but this could be a signal for more weakness in the business for the short term, because generally, guys, these insiders know a lot more about the company than the general public, and when I see some meaningful sell orders, it does pique my interest. But that being said, it could also just be a nothing burger. You know, maybe they're just selling because they need the cash. There could be a lot of reasons why they're selling, but it is something to keep note of. Now, if you're an investor that has a longer term outlook, this could be a very good opportunity for some good upside in this stock. I think what we're seeing here could potentially just be some short-term struggle that the stock is seeing. And if you believe that over the long term things will get back on track, then you're getting this at a pretty attractive discount here today. Analysts are actually predicting around 11% growth here in 2020 for the company. But here's the thing, in 2021, we're back on board the high growth train, as Alteryx is expected to grow by 27.7%, which is extremely strong growth. And to pick up the stock at these levels right now does appear to be very attractive if they can execute and achieve those numbers. Now, in my last video, like I discussed, Alteryx has a good balance sheet. Alteryx is a growing company. Alteryx is in the software space, subscription space. You know, all the metrics are really going for this company. It's just that they had some short-term struggles. You know, growth wasn't as high as investors were expecting. However, like we just saw, 2021 appears to be back on track with high growth. So if you believe that the company can actually execute and hit those numbers, or maybe even exceed those numbers, then $110 per share is a pretty attractive price right now. Now, for me personally, I'd still want to see this under $100 per share if possible. And I think, you know, as this quarter progresses, if there's nothing really that comes out that sways the stock in a positive or negative direction, I think we'll continue moving sideways and slowly start to decline as well, maybe hitting that $100 mark that I'm watching. I also think there's a very high probability that this company does what Align did last year when it faced struggles and fears of slowing growth. And you can see here exactly what happened with the stock. It sold off after disappointing guidance, remained around that level for an entire quarter until the next earnings report, and at that time it started recovering, and now the stock sits 70% off those lows. If you were a subscriber of the channel, that's when I was buying a ton of Align shares, so you know, maybe I'll do the same here with Alteryx. We'll have to wait and see if September provides us any more discounts on this stock. And hey, if you're still watching, guys, hit that subscribe button down below if you're new here, and hit that bell notification as well so you get notified of any new videos that I release. But thank you so much for sticking around, and now let's get into number 3. Raytheon Technologies is the combined company of previous Raytheon and United Technologies. This stock is down nearly 40%, but unlike other companies in this space like Boeing, for example, Raytheon offers some very good value here at current prices with a bonus, nice, juicy dividend. The new combined company, thanks to its past history with the two previous companies, has a dividend history of 29 straight years of increasing the dividend, and they have a respectable starting yield today of over 3%. Now, this isn't an overnight success stock, but the value that Raytheon is really showing us here may be a once-in-a-lifetime opportunity in a company like this. So Raytheon does both commercial and government work. The commercial side of the company, of course, is hurting because one of its customers, Boeing specifically, and the whole commercial aviation industry is struggling right now and will take many years to recover back 2019 levels. However, the other side of the business for Raytheon is the government contracts specifically, respectively. And as of Q2 2020, they have $73.1 billion in government contracts. So this will keep them going for many years to come. And in the meantime, the commercial side of the company should continue improving, and more likely than not, the worst is already behind them when it comes to this part of their business. Now, really with Raytheon, you have to have a ton of patience. This is not going to be a stock that recovers overnight. I don't even think the stock will recover in the next year or so. But I think that if you're looking at, 5 years out, 10 years out, this will be a very, very strong company, especially with all the government contracts that they have. They're not going anywhere. They have a good balance sheet. They have a good dividend. And you know what? At current prices, I do believe that it is undervalued here. Now, I'll be honest, initially when, this whole global issue hit, I was pretty optimistic on the industry recovering and bouncing back quick, like the commercial side of it with Boeing and stuff. But clearly that's not the case, and things have gotten progressively worse with that industry. So it is going to take time for that part of Raytheon's business to really pick back up to 2019 levels. You have to understand that, and you have to be ready to really see the stock move nowhere for the next little while. But as a bonus, you are getting that 3% dividend, that they are growing year over year. So that's at least something for holding this stock in the meantime. Now, for me personally, I actually like anything under $70 in the stock, and under $60, I really like what I see. Now, those of you in my VIP membership group already know that I've been watching this for a little while and that I have bought into this company, and I will continue doing so for the coming months. So secretly, guys, I'm kind of hoping that we remain at these levels so that I can build up a sizable position in Raytheon before we start seeing a recovery in the stock. So really, out of the 3 stocks we discussed today, I would say that Raytheon provides the best upside for capital appreciation with low risk. Intel provides good stability with, decent capital appreciation, but you're getting a good dividend as well. And then finally, I think if you're looking for just pure growth in capital appreciation, Alteryx is the clear winner here, especially at these suppressed levels, if you believe the company can turn things back around and return back to high growth in the next year or so. There's obviously pros and cons to each one of these investments, but I hope you guys enjoyed this video and understood a bit more about these companies and my kind of investment thinking around these businesses. And if you agree or disagree with me, just let me know in the comments section down below. Also, for those of you that stuck around to the end, just comment down below pizza so I know who my true fans are that stick around to the end of the video. Thank you so much for watching, guys. Don't forget to invest positively, and I'll see you in the next one. Peace.